When you hear New York Stock Exchange, do you picture a bunch of stressed-out people yelling at each other on a chaotic trading floor? Yeah, that's pretty much what most of us think. But while that frenzy is what gets all the attention, the real story is in how the NYSE is making money, big money. And it's not just from trading stocks, so buckle up because we're going to break down how the NYSE operates like a cash-making machine. And spoiler alert, it's a lot more sophisticated than a bunch of folks shouting buy and sell all day long. Alright, quick history lesson. The New York Stock Exchange, better known as the NYSE, was founded all the way back in 1792. And believe it or not, it all started under a buttonwood tree on Wall Street, where 24 brokers decided to meet up and make things official. Fast forward a couple of centuries, and the NYSE has evolved into a global financial powerhouse. Today, it's where some of the world's biggest companies like Apple, Tesla, and Microsoft are listed. But how does it make money? Well, think of the NYSE like the ultimate middleman. It's not just the place where stocks are traded, it's the stage where the biggest financial dramas unfold. And the NYSE? It takes a cut of the action. Let's start with listing fees. When a company decides to go public, basically when they say, "Hey world, we're ready to sell shares and make some cash," they don't just knock on the NYSE's door and get in for free. Oh no, there's a serious price tag. Think of it like getting into an exclusive club, with a hefty cover charge. The NYSE charges companies an initial listing fee, which can be up to $250,000, just for the privilege of putting their name on the board. But it doesn't stop there. Companies also have to pay annual fees, which can reach over $500,000 depending on how big and successful they are. It's like paying rent, except your landlord is the NYSE, and if you're a big player, your rent is a little higher. So whether you're a tech giant or a smaller startup, you're going to be shelling out serious cash to stay listed on the NYSE's prestigious stage. Next up, transaction fees. Here's where things get interesting. Every time a trade happens on the NYSE, whether it's you buying one share of Apple or a hedge fund trading thousands of shares in microseconds, the NYSE gets a little slice of the pie. Now these fees are small, just a fraction of a penny for each trade. But here's where the magic happens. There are billions of trades happening each year. That's a lot of tiny pennies adding up to a massive pile of cash. Think of it like this. Imagine getting paid every time someone uses a vending machine. Except the vending machine is global, and it never stops. And unlike vending machines that sometimes steal your dollar, the NYSE's machine is always working smoothly. Each trade that happens means more cash for the exchange. It's the gift that keeps on giving. Now here's something that might surprise you. Data sales. Every single trade that happens on the NYSE produces valuable information, prices, volumes, trends. Basically, it's the heartbeat of the market. And let me tell you, companies will pay a fortune to get their hands on this data. Think of it like this. Imagine if you were able to see every move your competitors were making in real time. You'd have an edge, right? That's exactly what banks, hedge funds, and financial firms want. The NYSE sells this data to these companies through subscriptions, and we're not talking about your $9.99 Netflix plan. These subscriptions can cost millions of dollars a year. That's right, millions. Just to get a direct feed of market activity. It's like the VIP section of a concert. You get access to everything before anyone else. Except instead of backstage passes, you're getting the inside scoop on how stocks are moving, second by second. In today's world, speed is everything. And on the stock market, even milliseconds matter. That's where technology and connectivity fees come in. Financial firms, especially those using high-frequency trading, want the fastest possible connection to the NYSE's servers. The closer they are, the quicker they can execute trades. And believe me, they're willing to pay a premium for that edge. Picture it like this. You're in a race, and the difference between winning and losing is whether you're standing right at the starting line or a few feet back. Firms pay the NYSE for co-location. Basically, they pay to place their servers as close as possible to the exchange's data centers. The result? Faster trades, and for the NYSE, another revenue stream. It's the stock market's version of Fast and Furious. Except instead of Vin Diesel, we've got financial firms battling it out in microseconds. And every millisecond costs money. Let's not forget IPOs, or initial public offerings. Those are when companies sell their shares to the public for the first time. These are massive events for the NYSE because they generate huge trading volumes on day one. And remember what we said about transaction fees? More trades mean more money. For the NYSE, IPOs are like Black Friday. Big crowds, big money, and big excitement. Think of IPO days as the Super Bowl of the stock exchange. And just like the Super Bowl, everyone wants a piece of the action. The NYSE collects extra transaction fees from all the trading frenzy, making IPOs one of the most lucrative events for the exchange. So whether it's a tech unicorn like Uber or a traditional brand going public, you can bet the NYSE is having a pretty good day. And finally, the NYSE isn't just sitting around collecting transaction fees. It's been expanding globally, acquiring smaller exchanges, and offering other products like derivatives and futures trading. It's kind of like a buffet. Stocks are just one dish. The NYSE has expanded its menu to offer a lot more. They're the ultimate multitaskers. Why focus on one revenue stream when you can have 5? It's like going to the gym, then realizing you can also make money selling memberships, smoothies, and workout gear. The more they offer, the more they make. Now, the New York Stock Exchange isn't the only player in the game, it's just the most famous. There are several other major stock exchanges around the world that operate in a similar way. For example, there's the NASDAQ, which is known for its tech-heavy listings like Apple and Amazon. Then you have the London Stock Exchange, the Tokyo Stock Exchange, and others like the Hong Kong Stock Exchange, all of which generate revenue through listing fees, transaction fees, and selling market data. Much like the NYSE, it's kind of like a global fast food chain. Each exchange serves the same basic product, stocks, but with a slightly different flavor depending on where you go. But running a stock exchange isn't cheap. The NYSE, like its competitors, has some pretty hefty operational costs. Maintaining that iconic trading floor and supporting all those traders and brokers comes with high expenses. Not to mention the cost of the massive technology infrastructure required to keep the whole system running smoothly, especially given the lightning-fast transactions happening every second. Think about it. Handling millions of trades a day in real time requires some seriously powerful computers and software. Then there's regulatory compliance. The NYSE is subject to strict oversight from bodies like the SEC, which means spending big on legal and compliance teams to make sure everything is by the book. And don't forget staffing. From the executives at the top to the tech support keeping the servers online, it takes a small army to run this financial machine. Put simply, the NYSE may be raking in the cash, but it's not all profit. Running the world's largest stock exchange has its fair share of bills to pay. So next time you see the trading bell ring, just remember, the NYSE isn't just making money, it's spending a lot of it too. Let's take a moment to talk about something that has completely transformed the NYSE over the past few decades: technology and automation. You've probably seen those classic images of traders frantically waving papers and shouting across the trading floor. While some of that action still exists, the truth is, most of today's trading happens in the blink of an eye, thanks to high-frequency trading and sophisticated algorithms. The NYSE has invested heavily in cutting-edge technology to stay ahead of the curve. Today, a significant portion of its operations are handled by automated systems that can execute thousands of trades per second. This isn't just about speed, it's about being able to process vast amounts of data in real time, ensuring that buyers and sellers are matched as efficiently as possible. And with this shift comes even more opportunities to make money. The NYSE's data services, from real-time data feeds to advanced analytics, are sold to hedge funds, financial institutions, and even private investors looking for that competitive edge. So, while the trading floor may still have some old-school charm, most of the real action is happening behind the scenes, at speeds faster than your Wi-Fi can load a cat video. This heavy reliance on technology also means big investments in cybersecurity. With billions of dollars flowing through their systems every day, the NYSE spends a fortune making sure their platforms are secure from hackers and cyber threats. So, whether it's through ultra-fast trading platforms, data services, or ensuring that their systems are bulletproof, technology plays a key role not only in how the NYSE operates today, but also in how it keeps making money in the future. So, that's how the NYSE makes money, by being a financial powerhouse that's part landlord, part data provider, and part speed racer. Whether it's listing fees, transaction fees, or selling real-time market data, the NYSE has its fingers in every pie. Next time you see a stock being traded, remember, the NYSE is making money every step of the way. Thanks for watching. If you learned something new today, hit that like button and subscribe for more breakdowns on how the financial world really works. And don't forget to leave a comment below. What do you think is the most interesting way the NYSE rakes in cash? Until next time, keep those knowledge drops flowing.